welcome you to today's web conference on Oncology Care Model, Performance-Based Payment Reconciliation, Successful Validation Strategies, co-presented by Foley and Lardner and Archway Health. Before I turn the presentation over to today's speakers, I'd like to go over a few housekeeping items. The program time permitting. Please type your questions into the Q&A widget that is open on the left-hand side of your screen. If you experience any technical difficulties during the presentation, please click on the question mark icon below the presentation window. The presentation slides are available in the Resources section. This presentation is also being recorded and will be made available on Foley.com within the next few days. CLE credits are being offered for this program. We will be announcing the 5-digit code at some point during the presentation. Those seeking Kansas, New York, and New Jersey CLE credit are also required to complete the attorney affirmation form. Enter the 5-digit code that will be announced during the presentation on the form and return the form to me immediately after the program. Now on to the main program. I'd like to turn the program over to Michael Blau, a partner at Foley and Lardner, to begin.
Thank you very much, Kristen. This is Michael Blau. As Kristen indicated, I am a partner here at Foley. I also have the honor of serving as one of the co-founders of the Cancer Center Business Summit. And on behalf of both Foley and the Summit, we're very pleased to host today's webinar on reconciling performance-based payment data under the Oncology Care Model. I'm joined today by two terrific speakers from Archway Health, Michael Fazio, who's the Vice President of Client Services, and Bongani, I know I'm going to mug this up, but Mngamazulu. Bongani, you want to say your last name properly so they don't torture this to death?
Mngamazulu.
There we go, Mngamazulu, who's the Vice President of Analytics at Archway. So let me start with a little bit of a roadmap to our presentation. I'll give you a bit of a background and context for the remarks that you're going to hear. Mike Fazio then will touch on most of the bullet points that you see here, which has to do with reconciliation, validation, and contestation of OCM data. So the central part of the program will be presented by Mike. And then at the end, Bongani will come back on. He's going to moderate our question and answer session. So with that, let me give you a little bit of background. Now, I recognize that this webinar is really geared for those of you who are already participating in the OCM model. And as I take a look at the attendee list, it looks like most of you are OCM participating practices. That said, this is not a signal or an invitation for the rest of you to sort of hang up or log off or sign off. I think there's plenty of insight here to be gained from the Archway remarks about the episode of care payment arrangements and optimizing performance and payments under the OCM model that would be applicable to any bundled payment or episode of care arrangement. So if you're interested in those topics, this will be a useful program for you as well. So just a little bit by way of background, recognizing that most of the practices are deeply, you're living this day to day and are really enmeshed in it. So let me just give you a little bit of light background. As most of you are aware, the OCM program began in July of 2016. And it's a episode of care program whereby CMMI, CMS, is going to pay in addition to the Medicare payments that physicians receive. Excuse me for 1 second. I've got something in my throat. Let me just clear it here. Thank you. So in addition to the Medicare payments that oncology groups typically receive for their chemotherapy payments, they're going to get two additional categories of payments. One set of payment is going to be these episode of care payments for a 6-month bundle, and the 6-month bundle will be $960 for a 6-month episode. In addition to that, the practices can qualify for a PBP, for a performance-based payment. And that's really what we're going to be talking about principally today. In order to qualify for those payments, the practices must meet two sets of metrics. One set of metrics is a quality set of metrics, and the other set of metrics is a cost-saving set of metrics. So the quality set of metrics, if you meet them, will determine a percentile relative to others that will be applied to your cost savings to determine how much of the cost savings you can keep as a performance-based payment. The cost savings metric will be measured against your cost benchmark, your practice's cost benchmark. And then applying the quality percentile, that will determine how much upside performance-based payment the group can receive and retain. But in order to get that performance-based payment, you have to meet a hurdle. And the hurdle is dependent upon which type of risk arrangement the practice has subscribed to with CMS. There's one-sided risk and two-sided risk. Under the one-sided risk arrangement, which to date is what all of the practices have opted for, and there are about 194 practices that are participating in the program, there's a 4% hurdle. That is, the first 4% of cost savings goes to the government, goes to CMS. And only savings that are demonstrated above that hurdle rate can be retained by the practice. If the practice elects to go to two-sided risk at some point during the program, then the hurdle rate is 2.75%, a lower hurdle rate, which means greater upside potential for the group, but also greater downside risk. So, the risk on the downside is that each of the practices that elect two-sided risk would be exposed to any costs that are incurred above the cost benchmark up to a stop-loss threshold. So that's the general scheme. And so as we move forward and look at performance and the performance periods, the August 2019 performance period, which is only a year away, is a critically important performance period for OCM practices. Because at that point, if you fail to be able to demonstrate a performance-based payment, that is, if you have not cleared the 4% hurdle under one-sided risk and shown that you can reduce cost above that hurdle rate, then there's an opportunity for CMS to actually terminate your participation in the OCM program under your participation contract. And if you do demonstrate that you're able to clear that hurdle and achieve that level of cost savings, that is 4% or above, then you can opt to convert to two-sided risk, which gives you greater upside, but as I mentioned, also carries with it greater downside risk. So the stakes are high. There's much riding on the proper calculation of the PBP data by CMS. And the reconciliation validation process and contestation process that Mike's going to talk about in a moment becomes very important for you, because if there are errors in calculation of the PBP by CMS, you can lose upside payments. You can exacerbate downside risk under the two-sided model. It may affect your ability to elect to go to two-sided risk in August of 2019 if you're so inclined to do so. And as I mentioned, if you fail to demonstrate that you've met that 4% hurdle by August of 2019 due to errors in calculation by CMS, you can be potentially improperly terminated from the program. So there's a lot riding on this. So with that, let me turn you over to Mike Fazio, who can talk about the validation and contestation process to make sure that you get your data right. Mike?
Thank you, Michael, and thank you, Foley and Lardner, for hosting this webinar today. And thank you to the attendees for your time. We know you're busy, and taking the time out to listen is always appreciated. So again, I'm Mike Fazio. I'm the Vice President of Client Services for Archway Health. If you don't know who Archway is, I'll tell you a little more about us. We're a bundle payment company. It's all that we do. Most of us have experience in various payment models. All of us definitely fee-for-service, some under risk contracts, and we've learned that bundle payment arrangements really do focus on those two goals that CMS is demonstrating even in OCM, which is to improve health outcomes and reduce cost of care. And we've proven that in the other programs that we're in with CMS around bundle payments. So we are bundle payment experts, and we partner with providers that are in bundle payment programs. We're based in Boston, Massachusetts. We also have an office in New York City where we have some software developers. And so today I'm talking to you from Boston, along with my colleague. And so what you see on the slide in front of you is our perspective around these programs. We encourage hospitals and practices like yourselves to join and try these pilots, really to learn, earn, and prepare. Learning is a huge part of any pilot project, and that's what we're doing right now in OCM. As you know, you just got reconciliations in February. We're at the beginning of that learning process. CMS makes a lot of robust, enriched data available to you. What they don't do is help you analyze it, and that's what we do. And we built a software tool to help OCM practices analyze their data. So with that data also comes sharing best practices among others that are in the program, and we do that in the other programs that we're in, and we're starting to do that in OCM, sharing what we see is working best. And CMS has done a good job at having affinity webinars where they're pushing that information out. And that's a great beginning to those learnings, but it's definitely a process that you should continue through the duration of the model. Earning, as you know, you're billing your MEOS payments and collecting that money, which helps with infrastructure. Some of you are earning PBP. We have one practice at the higher end of the scale that earned about $1,400 per episode in PP1. That's a tremendous accomplishment, and obviously not the norm. They're on the extreme side, but it does show you that it is possible to still earn savings in these types of programs. And so, yes, you just finished your first reconciliation. You've got 8 more to go. So figuring out how to do that is something I'm sure that's on all of your minds. And then using these programs to prepare for what's coming. So CMS making this more of a payment model going forward as a replacement for fee-for-service, things like bundle payment and other value-based payment models. And also commercial payers are paying attention and piloting oncology commercial bundles in certain markets. We're working with a few commercial payers now, and we can tell you from our experience, it's very early in that process. And they do look to what Medicare has structured and defined, and how that's working is something that's being scrutinized really by the commercial payers to see how that will affect what programs they roll out. So it does give you a great opportunity to learn, earn some money in the process, guaranteed through MEOS and maybe some PBP, and then prepare for what's coming in the future. So why is reconciliation validation important? We can tell you in the other program that we have a strong market presence in, which is called the Bundle Payment for Care Improvement Initiative. Long name, the acronym is BPCI. The next version of BPCI is going live in October of this year, and they're expanding the program. It's not an oncology-driven model, but it is specialty-driven, mostly orthopedic episodes and cardiology episodes. We've reconciled in that program 10 times, and we learn something every time we reconcile. At the beginning, it was a learning process for both CMS and us, but it continues. And so in OCM, you have the ability to validate your reconciliation, and it's outlined in your participation agreement for OCM. And so you have 30 days to contest. You have to provide clear evidence of what those errors are. The good news is CMS gives you the data. So they give you the raw files, the episode files, and the claims files that support reconciliation. But it's up to you to go through those files to find evidence to support what those errors are. So we've designed software to make it easy to do that. But it's something you should consider. We identified about $500,000 in errors per practice that we support. It was the first time we could contest an OCM. So we found evidence and we gave it to CMS to review. And it's really not CMS that does the data. It's really they work with vendors behind the scenes. The company or the organization that they've contracted with for reconciliation is called the Actuarial Research Corporation, ARC. And so it's their first time as well reconciling this data. So there's, I think, a learning process for CMS, their vendor, and all of us as participants in this program. So you have 30 days to contest, not a quick timeline, especially if you're a large practice, or even if you're not. It's a lot of data to go through. And you do have to be clear on what those errors are. So giving claim numbers and billing codes, filling out that contestation form is not an easy task. So we'll show you what our solution is to do that. But you've already, I'm sure some of you on the phone have contested and learned a little bit through that process, and some of you maybe even didn't realize you could contest. So we've made it clear, as I said, and we'll show you what that looks like. So PBP methodology, just a quick overview. You're all aware of what this is, but really it's looking at that target amount, which is calculated per the pricing specs that CMS has laid out, and they use a regression model to do that. So it's the patient's characteristics drive that target amount, age, sex, comorbidities, if they're in a clinical trial, and that's done at the episode level. And at reconciliation, all this information is then summarized and aggregated. So overall, what was your target amount per episode? And overall, what were your expenditures, which are the cost, the claims cost that CMS paid out for those episodes? And how do the two compare? Subtracting the two gives you a quick answer if your expenses were above your target or below. And then how you did on your performance multipliers impacted how much you got, if any, of PBP. So the 3 claims-based measures for performance period 1 and 2 have a higher weight than the other measures, which right now you're reporting. That changes over time during the duration of the model. So there's a cost component and then a performance component, which is driven by the quality measures, to then equal what your PBP would be. And as you know, CMS has been public about how many of the 184 practices that are now participating in OCM earn savings. About 25% did, which means 75% did not. So we'll see what that looks like in performance period 2. So one question we get asked a lot, and as Michael touched on earlier, was when is this reconciliation? When do we need to decide or be forced to make a decision to take the two-sided risk model or leave the program? And so CMS has been pretty clear more recently about that, and that's what's highlighted in red. So these are the 9 performance periods that are part of OCM. The one highlighted in blue is the one that you've already gone through in February. If you had a fun time with that, you're in luck because there's 8 more to go. And so the reconciliation for performance period 4, which happens in August, is when you have to either earn a PBP by that period or take the two-sided risk model if you want to remain in the program. But you can see that what we did is outlined below that box what that really means. And so that means that at that period, you have 1 more year in the program or 2 performance periods where you'll either be at risk if you take the two-sided model or not be part of the program for that period. So, that's something to think about, is that you'd be at risk for 2 performance periods or 1 year. And this is a 5-year pilot. So that is something to think about when that decision is in front of you, if you haven't earned PBP by the time we get reconciliations next August. So if you did reconcile, as we did, you got information back from CMS last week. They sent out their determinations on every single line item that you provided in that contestation form. So we reviewed those, and it wasn't clear initially to look at the reasons of determination. At first read, it looked very negative from our perspective until we dug deeper into some of those details. And so we found that overall across our customers that we contested on behalf of, which were 12, we found that CMS accepted $1 million of contestation errors that we put forward as evidence. And so that, we learned a lot from that experience, as well as the reasons why they didn't accept certain evidence that we thought were very clear. One of the key takeaways was they didn't provide direction on how certain codes should be billed or flags should be billed. And so even though we might have seen a flag through evidence of a claim, where that code was on a claim might not have been in the right spot according to the contractor, were some of the reasons that we saw come back. And we're still going through those now. But accepting $1 million of errors is a pretty big deal. So it's compelling, and it's something you should validate. And one thing to note, as CMS changes the pricing methodology moving forward in the pilot, which they will be doing. I mean, they've already announced in Performance Period 3, they're putting forward a fix for breast cancer, which the specs haven't come out yet. You know that prostate and bladder cancer pricing fixes are being pushed forward in Performance Period 3 as well. So every time there's a change, that just gives another chance that something could be wrong at reconciliation. Sometimes their vendors don't get it right the first time. So validating results every time is important. And so the reasons that we listed here on the slide are ones that we found clear evidence in the claims to support at least trying to contest. So missing risk adjustment flags, such as cancer type, clean period, radiation treatment, clinical trial, and cancer-related surgery. Those are the types of evidence we found in the claims that were clear to us. We did find a little bit of evidence to support novel therapy percentages, meaning that anything that we're contesting is in favor for a particular customer. And so we found that CMS might have been off a little bit, and we added to that amount. Not a huge area of errors that we found, at least in Performance Period 1. And then attribution. There wasn't a lot we could do with attribution because CMS doesn't provide claims for patients that aren't attributed to you. So we found a little bit of contestation errors for attribution, but it wasn't a very large area for us to investigate. So I'm going to share my screen with you now and just show you what our tool looks like and how that's designed to give you a sense of how we make it easy, and it could give you ideas of what you could do as well. So, as I mentioned earlier, the flags that really drive the price up are something that we zero in on immediately. So we found, to be honest, one of the main errors that we found that CMS said, you're right, we're going to fix that up in the next true-up, was in the clinical trial flag. And so you know the codes to bill to do that. If that was found on a claim that we could find, we put that in the contestation form and populated that. So this is an example. And by the way, these aren't real names. We've changed the names for demonstration purposes, but it does represent some real data. So you can see that we make it pretty clear for practices to be able to see what those contestation reasons are and what the impact is to their practice. And so we let our customers decide, here's the evidence. We showed them what that evidence looked like, and it was up to the customer to decide if they wanted to move forward with contesting or not. We can tell you that every one of our customers that we support did. We support about 20 OCM practices. Most decided, sure, let's go for it. It's our first time. We'll learn by doing it, and you're supplying real evidence to be able to do that. And so this is another example of what that evidence looks like. So CMS said for the reconciliation that this particular patient, again, not a real patient, did not have a clinical trial, and we found evidence that they did. And we can provide the claim numbers and the dates of service of when that happened, and the Z code that was billed for that clinical trial, which triggers the flag. So this is an example of some of the evidence. And so our software does this very quickly. And so we can go through all those claims files and then present the data to the customer to then make that decision to contest or not. If you want to go through, if you're not using a tool and doing that yourself, that's probably something you could figure out how to do. It's not easy. As I said, CMS gives you the evidence, but they don't provide that to you as far as how to do that exactly. So just speaking about data, actually, let's go back to a quote that my colleague Bangani shared with me. Even if you're on the right track, you'll get run over if you just sit there. Most of our customers, especially early on, weren't sure what track they were even on. So they really asked us to analyze their data that CMS provides and give them guidance on what direction to take. But even if you did well in your first performance period, you have to continually innovate and move the needle forward and look at those cost-saving levers and pull them. And so don't get run over, I guess is the point there. And so really what we've done is figure out a way to design a tool around the raw claims that CMS provides to you on a quarterly basis. And as you know, those are coming out quarterly. They're trying, we think, to make that come a little quicker. I know that CMS hears a lot of feedback from participants like yourselves that need more data more frequently. As of right now, quarterly is the quickest that they can provide it. But there's a lot you can do with that rich data. So you could figure out, how are you currently doing? How are you looking against your targets when you compare your costs? And how are you doing on your quality measures, and where is there room for improvement? Why are you performing that way? And you can do that by cancer type and even by physician in your practice and starting to get into the details there. And then learning what you can do about it. That's a hard question. We're at the beginning of figuring out how to answer that. The easiest way for us to answer that and help practices answer that is by looking at benchmarking data. How do you compare to your peers from a cost perspective and quality perspective? Where have others figured out where those levers are, and can you bring in some of those learnings into your practice? We recently started working with an oncologist who is very experienced with value-based payment models and started looking at our clients' data to find nuggets of clinical insights, really, and using his clinical insights to find those levers of savings. So that's something we're experimenting with, kind of keeping with that pilot theme. But all practices ask us where to start. And the best place to start is looking at how are you doing on those 3 claims-based measures. CMS designed those measures or chose those measures because they felt, and through evidence that they've viewed, show that they have a direct relationship to cost savings. And so the ED measure, for example, your points for that measure are based on your performance for that. So getting below 21.7% on that particular measure is the place you want to be. So how are you doing on that measure today? You saw in your first performance period what that looked like, but what does that look like in future performance periods? With the claims data that CMS provides, you can do that. Same with admissions. So again, big areas of cost savings. If you can avoid ED visits, you avoid admissions. The data that we've studied, around 40% of ED visits end up as admissions, and so it's very costly. Some ask about ED visits and say, it's in the hundreds of dollars as far as savings. It's actually almost $1,000 per case if you add in all the Part B claims that also support that just one visit in a hospital ED. So you want to avoid ED if you can, and definitely admissions, which are related to that. And then, so both of those need to come down. And then hospice days at 3 or more days is where CMS is monitoring you and wants to see that increase. So right now, if 60% or more of your patients who expire receive 3 or more hospice days, CMS is rewarding you by giving you maximum points for that measure. But that varies by cancer type and by physician. And so figuring out where you fall and how you're performing on those is something that everyone should start and begin to look at those for cost savings. So just taking into account or giving you an example of some actionable insights, this is a few practices that we've worked closely with for a while, have used the data to figure out where those opportunities are. So before deploying a symptom management and triage pathway program, a few practices look to see where their ED utilization is, how does that look by cancer type, and where do they need to focus and prioritize resources. So instead of figuring out, well, we need to attack every single episode in cancer type, maybe not. There might be some cancer types or even some physicians in your practice who have figured it out. And there are many that probably have not, and many cancer types that could use some focus. And so figuring out where you're falling on those measures before implementing a model is something that you should consider. And we can tell you that our customers who have done that are on the right track. So I'll give you a sense of what that looks like just from a data perspective. There we go. Great. So this is an example of our dashboard. And so what feeds this dashboard is the quarterly data that CMS provides. So practice would be able, just with a few clicks, to be able to see how are they performing on those 3 claims-based measures, and how are they performing on a target versus cost perspective. And so you'll see the colors just changed. And so usually we show red as being an area of top concern, yellow or orange kind of being in the middle of the pack, and green being good. So you can visualize and see what performance looks like for this particular practice. Again, this is real data, but we've blinded the data. So ER visits is an area of opportunity for this particular practice. They're achieving right now about 2.5 points out of a possible 10. So you want to really knock that out of the park and get above 10, or get all 10 points if you can. Looking at admissions, they're at the top end of the scale, but not getting maximum points. So that's something that we would recommend this practice look at. And then for hospice use, they're achieving half of the maximum points. So 50% of the points instead of 100%. So there's room for opportunity really in all of these areas. And then from a cost perspective, you can see that their average episode expenditure is actually above what their target is. And so that is the wrong direction. So if we were to point this particular practice on the right track, we would say, let's focus on these measures, and there's room for opportunity there. And then also, we need to really look at your costs and what's driving that and how that relates. So, one way to do that easily is looking at hospitalizations by either physician or by cancer type, like we said earlier, to focus on where those opportunities are. Are there certain doctors in the practice that are doing relatively well? Those would be highlighted in green as far as what their percentages are of inpatient utilization. And there are others that are on the other side. So here's an example. Here's not a real doctor. High volume doctor, 40% of their episodes had 1 or more inpatient hospitalization. So that's well above the target that CMS has structured the program around and is looking at. And so that is an area of opportunity. Anyone that's high volume, or even a cancer type that's high volume, is an area to prioritize. Same thing, all I did was just flip it to cancer type. And so you can start to see for high volume cancers what that performance looks like. And so for this particular practice, they do quite a bit of lung cancer. and their inpatient admission rate is really high, and that's why it's red. And so figuring out, this is a pilot, as we said, and this is the learning part of it, is what can you do to implement some practice transformation changes to impact this? And you can experiment with it to see if there are things you can implement in your practice to change the course of that, and then monitor these percentages over time as you get data to see if you are moving the needle in the right direction. You can do the same thing with ER utilization, looking at it by cancer type and by doctor to see the high performers and the low performers. And so you might have a high volume cancer type where it's a particular problem. Like for this particular practice, lung cancer came up again, and you can see how those colors vary. And then looking at hospice use. So one customer of ours recently provided this type of a dashboard to their physician board when they met, and they had their top, so they used a similar, well, they used this, and sorted this, and they saw that one of their top volume physicians had a percentage of 61%. And so they said to that doctor, what do you think about that finding? And this particular doctor said, I want to be at 100%. So even though I'm the top performer in my practice and the highest volume, I want to be at 100. And so, that's a great goal. But you obviously have others within your practice who are performing well below that percentage. And, that warrants a conversation to start of how to use end-of-life care appropriately and introducing palliative care early. And we're starting to hear more of those conversations happen now. Pushback. So as you can see, using the data to help drive where you need to head is something all of you should be doing, and that's why CMS provides this data to you. Again, they don't help you to analyze this data. They do give you the feedback reports, and there's been, we have a certain perspective on those reports. We know that RTI is the vendor that uses them. They've used those reports for ACO programs. So a lot of the measures and metrics that are in those reports look at care on a total cost of care timeline, really on a year basis, not an episode basis. So there are some insights you can gather from those feedback reports, but not really directly for OCM episodes, because that isn't, and the CMS has said, that isn't how the feedback reports are designed. But using the claims that support those feedback reports and that are provided when those come out in the beneficiary files are definitely resources you should be looking at and using to help set the course in the right direction. So with that, we've pretty much ended our material, and we're happy to take questions from the audience. And feel free to share how you've been using the data, and maybe even providing some insight into that.
Before we take questions, I'm going to interrupt for one moment. I am going to read the CLE code for this program. And as a reminder, for those that are in need of CLE credit today, I will be opening a polling question momentarily. Please enter the 5-digit code that I will read into the polling question and then press submit. Again, I will be opening a polling question. Please do not use the Q&A feature. Please enter the CLE code into the polling question and then hit submit. Okay, today's code, I'm now opening the polling question. The code is as follows: 6, the number 6, the number 2, the number 7, D as in David, D as in David. And I'll read that again. It's the number 6, the number 2, the number 7, D as in David, D as in David. If you are seeking CLE credit for this session, please enter that number into the polling question. The polling question will remain open briefly. For those seeking Kansas, New York, and New Jersey credit, in addition to the polling question, you will need to complete the attorney affirmation form and return it immediately after the program. A copy of the form can be found in the resource list widget. As a reminder, certificates of attendance will be distributed to eligible participants approximately 8 weeks after the web conference via email. Just give a few more seconds. Okay, at this time, I'd like to turn the program back over to our speakers for Q&A.
Thanks, Christine. Again, please feel free to enter the questions on the chat utility on your screen. We'll try to get the session started with a few questions that we had submitted ahead of the conference. The first one is it worth validating future performance period reconciliations? Mike, do you want to take that, and then I'll probably add some color?
Sure. So what we've seen in the other programs is that it absolutely is important to validate future reconciliation periods. And the reason is the vendor who runs reconciliations could, because of changes to the model, make errors. And so, don't take for granted that those are done without any errors. And so because you can, per your participation agreement, contest and validate, you should absolutely validate that information because it does impact you financially. And so, any payer, in fact, when I was director of contracting for a hospital system, I would always validate what any payer gave me as far as a settlement amount, or when we were in risk-based contracting, those settlements that were done throughout the year is something we would do in contracting, is validate that anything a payer is giving you is right before you settle. And so think of this as a settlement statement that you're having, and you have 8 more to go, and given the model and how it's changing over time, which is a good thing, make sure that they're doing everything correctly. And so because you have the right to do that per your agreement, you should exercise that right.
Yeah, I think that's great. I'll add one more thing, which probably, even assuming that every calculation that has been done is correct, and this is a point that CMS actually expressed in one of their Q&A sessions, is that the part of the process of contesting is actually a way to learn the nitty-gritties of how the program is designed and how it works. In some instances, what you learn actually results in CMS changing policies. So, and so one of the things that CMS, Lara Strawbridge specifically recommended was that if you have anything that you don't understand why it came out that way in the reconciliation, contest it anyway, because the explanation, even if you're not granted your wish, the explanation of it helps you understand how the program is structured and can help you prioritize the areas in which you need to focus to be able to be successful in future reconciliations. So if for anything, the fact that you're learning is a key part, and the reconciliation process is a key part of that. So I think that's that question. The next one that I have here is, how can I validate that CMS correctly attributed OCM patients to my practice? Mike, I think we've heard this one a lot when we have shared our data with clients. What's your take?
So we would love to help validate that, but CMS, since they don't provide claims for patients that aren't attributed to your practice, you can't validate that how they're attributing per their methodology is correct. So one thing we've asked participants to voice to CMS is, can you provide us with data for patients that we might, patients that we treated and billed MEOs for, but aren't necessarily attributed to us. And so with that data, and because they are in treatment with your practice, that would enable you to validate if attribution was correctly performed. But without having that data, you don't know outside of your walls where those patients are going. So you can see once you do get that data for the patients that are attributed to you, that you can see everything. Every E&M visit, whether that's done at your practice or outside of your practice or at a hospital, you have at your fingertips. But if CMS doesn't provide you with those claims, you can't do that. And so that's something we've started to tell practices to say.
That's the challenge, I guess, with attribution, beyond just the methodology of attribution itself, is that even if you accepted the method, the data that is made available is truncated, if you will, in a way that doesn't allow you to fully understand how the care of the patient that came to your practice actually evolved, whether it was within your practice, whether it was with another OCM practice. So in our case, we actually have engaged various aspects of CMS to figure out what is a workaround this solution. So we're in early stages of figuring out alternatives to augment the data that they sent to you already in order to be able to answer this question about attribution, plus also other questions that practices have had with regarding to identifying, for example, when episodes are starting or other things yet. So that is the next question that we had on the list here. Another question that came up that we have on the list is what should we expect about the August true-up? Mike, do you want to speak briefly about what practices should be expecting in the true-up report, what it means?
Sure.
Versus what they got initially in the February-March timeframe?
Sure. So the next reconciliation that you'll get in August, which is for PP2, will contain a pretty big line item for Performance Period 1 true-up. And along with what CMS provides you in that field, you also get the claims that support that true-up. Given that everything that we've learned and you've learned through this reconciliation process, you've heard about the Z-code issue in those billings and how that will affect true-up and attribution. All that data will be given to you to validate in August, as well as anything that you might have contested and won. So as we said, we found $1 million worth of errors. Those errors will be provided in a true-up form at reconciliation in August, and the details supporting that will be provided to you at that time as well. So I guess one way to think of it is it gets harder to do validation because now you're not just validating one performance period, but it's two. But you want to make sure that CMS is accounting for all those changes correctly. So if you were affected by the Z-code issue, and from our groups, about 20 practices, there are some that had significant swings in both PBP and volume because of those issues. You want to make sure that those are correctly calculated by CMS as they design them to be. So that's something you should definitely pay attention to in August.
Yeah, I think those are the things that you should expect. I'll broadly categorize it as initially all true-up always include additional claims data that was not available when the initial reconciliation was done. So additional claims means more expenditures, but potentially also changing of the categorization of an episode. The second one is correction of errors that you contested for. And I will point out to you that if you are looking at your contestation responses, always look for the words will be fixed in true-up 1 as a clue that it's something that CMS is planning to address that will be in your favor. So you'll see that. And then lastly is some of the broad method changes that they've acknowledged and admitted to are going to be corrected in that. So you will see most of the time an increase in your episode volume from the initial reconciliation period. I've seen some data where there's 25% more episodes. And so what that means is really it's almost like a fresh start for you, and you're looking at a different panel. And so those are the things you should expect, and I expect that, it will require the same thorough review as we did with the initial reconciliation in terms of finding any errors that are still existing or not. The next question that we have up on the board is, so Mike, I think you can speak to this. So you indicated that we contested about $500,000 per practice in the initial reconciliation, and CMS acknowledged about $83,000 worth of errors per practice. Why the big difference? Can you speak to that?
I can. I'd actually like you to speak to it. You're better at the details around that. I mean, we've read through all of their answers as to what they accepted or didn't accept. I think that it wasn't specific as to how practices should bill for certain flags, such as clean period. Would that be a fair statement? Do you want to tell a little about what we found?
So there are several categories of errors that, we contested, and CMS responded with some of them acknowledging the errors and some of them clarifying why our understanding was not complete. And one of them really has to do a lot with how you bill. And in one instance, they indicated, for example, that to acknowledge that a chemotherapy had happened to a patient 60 days before a patient had an episode, that they would look for a concurrent diagnosis of cancer alongside that chemotherapy. Now, depending on how you code and bill, you may have those claims as one claim, you may have those claims as two claims. If it's in one claim, then you'll find the diagnosis code in the same claim as the chemotherapy itself, and that is being recognized as an actual chemotherapy event. But if you have them in two claims, the way CMS has applied or designed the rules is that they won't recognize that that is an appropriate chemotherapy. So that was one nugget that we learned from the process, is that the way that practices bill can actually affect how CMS recognizes whether there's a history of chemotherapy for a patient or not. The other issue, and this probably is related to the Z-code issue that resulted in episodes not being initiated, was essentially a lot of these chemotherapies that were in patients' histories had the Z-code diagnosis in the header of the claim. And because CMS did not recognize that to trigger episodes, they also did not recognize it as a code to recognize history of chemotherapy. So that resulted in a bunch of other misses as well in terms of what was acknowledged as a true contestation. What CMS has said in kind of a murky language is that while we think we implemented the logic correctly to identify history of chemotherapy, we will implement the Z-code fix in true-up 1. And so if you read around those circular words, they're basically saying they will fix it in true-up 1, even though they're not explicitly saying we're accepting the error. So that is one example of an issue that we thought, and there was quite a large volume of cases like this. So that makes up about really 250 of that $500,000 difference, or $400,000 difference. The other issues that we are learning with the data is there is a much more emphasis on the data, the existence of cancer diagnosis for all the flags, which was not actually in the specs themselves. This is clarification that came out through the contestation process itself. So it goes back to my earlier point. The contestation process facilitates learning, and so this is one of the discoveries that we've made since reviewing the responses is the tracking of cancer diagnosis is critically important for any of the flags to be recognized. This includes clinical trials, whether a cancer has surgery or not, whether a cancer has a history of radiation or not, all those factors that make an episode have a higher budget. The requirement to have cancer diagnosis alongside those claims is paramount. So this is something to take back to your billing teams to basically make sure that this is something that is in your billing procedures. Cancer diagnosis is a requirement alongside anything essentially that is recognized as a risk factor. That is the second nugget that I think it was crucial for us to learn through this process.
And Magana, as you mentioned, this was not outlined really beforehand.
No. Beforehand, they just said, we're looking for history of, surgery, or we're looking for surgery, and these are lists of surgery codes. Then the last maybe finding that I will point out is something that we suspected earlier on, but CMS confirmed with us is for the risk factor of whether making a cancer one with surgery or one without surgery. The way that CMS applies the rules is that, so what we did is we found evidence of surgery having happened within the 6 months, and we provided that to CMS. And when they came back to us, they said, well, the surgery that you indicated is not a surgery associated with the cancer type of the episode itself. So for a patient with multiple types of cancers, this presents a problem because the episode can be of breast cancer, but the patient can also have, bladder cancer or some other kind of cancer. If they have surgery related to bladder cancer, their breast cancer episode will not be recognized as a breast cancer episode with surgery because by the rule of plurality, the episode became a breast cancer episode. So that is another learning that came out of this process, is that the application of the rules are extremely rigid and extremely stringent. In some ways, there are some methodological issues. I would say the recognition of surgery is something that practices need to talk back to CMS about. If somebody has 2 types of cancers and one of them has surgery, you can't say that they did not have surgery during the episode. So that's a long answer. If we have a time for one more question, I'll probably pull that up. See. So another question is, do we have, do we have expectations about practices, more practices earning PBP in future performance period? Mike, I can take that, or you can comment. Well, I would say on a high level, yes. And the reason I say yes is because we know that in performance period 1 and performance period 2, CMS is using a budget or a pricing model for prostate cancer and for bladder cancer that underprices those episodes. The target is too low. And so that is being fixed in performance period 3. Also, through the reconciliation process in performance period 1, we also uncovered that breast cancer with Part D only therapy was also severely underpriced. Almost all of our clients were not making savings in that category. So we informed the clients to inform CMS, and we also informed CMS, and they came up with a correction. So in performance period 3, there will be 4 cancer types that will have improved changes. Kidney cancer is split into kidney cancer with and without surgery. So that gives the cancer with surgery a higher price. Prostate cancer is going to be split into 4 severity categories, and bladder cancer will be split into with or without surgery, and high and low severity, and so forth. So those changes will give practices more room to work with, and by that we conclude that they will have a better chance of making savings going forward. So I think we'll end there with the questions. Christine, I'll send it back to you.
Thank you. I would like to thank Michael, Mike, and Bongani for an excellent program today. I really appreciate your time. And we invite the audience to please contact any of our speakers today. I have just put up their contact information on the screen if you have any additional questions or would like any further information. This wraps up our web conference for today. Just a reminder that today's program is being recorded and will be available on Foley.com within the next few days. At the conclusion of this program, a questionnaire will appear. Please take a few minutes to give us your feedback on today's presentation. It's important for us to know your thoughts and help shape our future programs going forward. If you have any questions, please feel free to contact me. I'm Kristen O'Neill at KONEILL@Foley.com. Again, it's KONEILL@Foley.com. Thank you, everyone, for your time today.